Good morning. You're watching Macroeconomic with me, Shreyanshi Singh, and Snehi Shah on ET Now. And over the next 1 hour, we take you through news and updates from within the country as well as across the globe. Snehi, quite the sell-off on Wall Street, right? It was an insane day, what it looks like.
Well, absolutely. And not only a bad day coming in on Friday, but over the course of the last week as well, if you see what's been happening with Wall Street, it's been ending the week consistently on the red. Some good days coming in for Wall Street, but mostly bad days when you talk about it last week. But that's not all right, because we discussed a lot more on the show this morning, right from the war that has happened over the weekend between Israel and Iran to BJP's manifesto. We have a lot to cover up with. So, well, let's get kick-started on the show then and talk about the US handover coming in first, because that is going to have an impact on our markets and how they open this morning as well. Stocks sold off on Friday as inflation and geopolitical worries once again dented investor sentiment on Wall Street. A broad decline in major banks also weighed on the market. The Dow slid 475 points or 1.2%, closing at 3793. S&P 500 also tumbled 1.5%. Nasdaq pulled back by 1.6% on Friday. At one point in the trading session, Dow was as low as nearly 582 points or 1.5%. S&P 500 also slid as much as 1.7%. When you look at it from a week-to-date basis, on the last week, the broad market index dropped of 1.5%, and the 30 stock Dow also fell 2.4%. Big drops coming in across all three indices, but well, this was rather penciled in by the street after the rally that we had been seeing over the last few weeks. While the tech-heavy Nasdaq is also 0.5% lower for the week. Now, lots of important banks, US commercial banks and corporate banks, reported their numbers over the weekend. JP Morgan shares declined more than 6% after the banking giant posted its first quarter results. We'll tell you about that during the course of the show as well. Wells Fargo slipped 0.5% after reporting its latest quarterly figures. Citigroup dropped 1.7% despite posting a revenue beat. So largely, this is what was happening across Wall Street when it comes to that. But when you also take a look at what's happening with the European markets, mixed indicators and mixed moves coming in on Friday, because DAX is closed negative with a slight negative bias, rather flat. FTSE on the other hand up 1%, and that European Stock 600 index also up almost 0.2%. Not much to worry about when it comes from the European markets, but well, yes, you cannot say anything about how the market is going to open today on account of the geopolitical action that we've been seeing over the course of the weekend. But Shreyanshi, on that note, also take us through what's happening with oil, because all of this is going to have an adverse impact on oil prices as well.
Absolutely. It's very interesting what's playing out with the oil market as well, and with gold and platinum. But let's take a look at oil first. Now, US crude oil futures were slightly lower on Sunday, and this is traders breathed a sigh of relief after Israel fended off a large-scale air assault by Iran, and the US emphasized it was to avoid a wider war in the Middle East as well. So when you look at the WTI contract, that lost a few cents, was around that $85 barrel mark. And when you look at June Brent futures as well, they eased slightly and were around that $90 a barrel mark. Now, US crude closed at $85.66 a barrel on Friday, while when you look at WTI as well, that was, now for context, WTI did begin the year around that $71 a barrel mark, and those are the kind of levels that we've seen coming in for WTI. Now, Iran launched more than 300 drones and missiles against military targets in Israel on Saturday in an attack that President Joe Biden described as unprecedented. Now, the crude oil market is now bracing for the new government's response to the attack, and whether this marks the start of a direct war between Israel and Iran. When you look at gold prices rose above $2,400 per ounce, an all-time high on Friday, and this is as growing tensions in the Middle East prompt investors to seek refuge in the safe haven assets. So when you're looking at gold prices, they did ease after hitting that particular mark, took a little bit of a breather after that record high that I just mentioned. Taking cues from gold's upward trajectory, we did also have platinum tested the key 1,000 per ounce level to its highest level in nearly 4 months. So platinum also pushed up above that $1,000 an ounce marks.
Well, absolutely. Metals have also been rallying on the back of all of this pressure, and gold, like you mentioned, has become a safe haven. Record highs and fresh record highs every day when you look at gold. But moving on, let me take you through the cues that you need to be watching out for over the course of this week. Well, for India, it's going to be a truncated week, because Wednesday, which is the 17th April, Indian markets are going to be closed on account of Ram Navami. But today you can expect trade data as well as the WPI, which is the wholesale price index, that inflation indicator, to come out today. 18th April is going to be the Nifty expiry. 19th April, very important day for India. India is heading into polls. Phase 1 of the Lok Sabha 2024 election will be kicked off on the 19th of April. Shifting focus then, let's talk about what's happening globally. Today from the US, you have retail sales. That figure will be coming out. Tomorrow, industrial production. 17th April, the Fed will be issuing its beige book, which will carry all of the macroeconomic indicators and performance of the US economy. And 18th April, you'll have initial job claims data also coming out. From the UK then, tomorrow, 16th of April, you'll have jobless claims as well as unemployment data. And 17th April, you have CPI. From China then, tomorrow you have retail sales, industrial production, GDP figures coming out. Lots of movement coming in China as well. So watch out for all of these macroeconomic indicators. Shifting focus back home, let's talk about results then. Well, we've kickstarted the earnings season last week on Friday with TCS and Anand Rathi Wealth. Let's take a look at what else is lined up this week. Then April 17th, you have Angel Broking, ICICI Lombard, General Insurance, Tata Communications, Just Dial as well. 18th of April, then from the Nifty pack, you have Infosys that will be coming out with its numbers, and HDFC Standard, Life Insurance, and Bajaj Auto. Among the non-Nifty pack, you have ICICI Securities, Mastech, as well as Swat Engines. 19th of April, then you have Wipro coming out with its numbers. So two big IT bellwethers coming out with their numbers this week. And from the non-Nifty pack, you have the HDFC AMC numbers also coming out this Friday. Shifting focus, let's talk about some board meetings and some corporate action coming in today. GICR board will be meeting for general purposes, and GTPI board will be meeting to consider their audited results as well as final dividend. Shifting focus to the primary markets, and on the 18th of April, the much anticipated and the much looked out for and watched on for Vodafone Idea FPO is going to be opening as well. And over the course of the week, lock-in period is going to be ending for Electronic Smart, Popular Vehicle Services, as well as Medi Assist Healthcare and integrated services. So, well, lots of cues to watch out for over the course of this week, despite it being a truncated week, Shreyansi. But well, yes, Wednesday is a holiday for us.
Absolutely. And let's move on to some more news and updates then. First, Iran launched a barrage of over 300 missiles and drones from its soil directly targeting Israel. Videos of explosions and fireballs over Jerusalem have exploded across the media as Israeli air defenses work to thwart Iran's attack. Israel's main ally, the US, too scrambled its jets and took down some of the missiles headed towards Israel. US President Joe Biden and Israel PM Netanyahu held a telephonic conversation where Biden pledged his ironclad support for Israel. Israel Prime Minister Benjamin Netanyahu said that the nation is preparing for a direct attack by Iran and that they are prepared defensively and offensively. Since then, Iran has closed its airspaces, while Israel, that had shut its airspace, has now reopened it. Additionally, Joe Biden is set to convene a G7 leaders meet today. This as the UK, Canada, France and Germany have unequivocally condemned Iran and their attack as well. It's reckless. The attack has been dubbed as a retaliatory attack for Israel's killing of an Iranian military commander in Syrian capital of Damascus earlier this month. Let's go across and listen in to what Israel's Prime Minister Benjamin Netanyahu had to say as well.
All right, we'll get you from what's happening globally and the latest that as well. But let's shift focus, and in other news, JP Morgan Chase CEO Jamie Dimon warned that multiple challenges like persistent inflation, war and Fed's effort to tighten financial conditions are threatening an otherwise positive economic scenario. He believes that many economic indicators continue to be favorable. However, he said that they remain alert to a number of significant uncertain forces. Dimon also warned about the large number of persistent inflationary pressures that may persist ahead.
Meanwhile, JP Morgan Chase shares plunged after the bank reported a disappointing guidance on 2024 interest income of around $90 billion, which remains unchanged from its previous forecast. Although the company posted a profit and revenue that topped the Wall Street expectations for its Q1 earnings, meanwhile, financial services company Wells Fargo also reported their Q1 earnings, beating the earnings and revenue estimates, although the company's profit fell to 7% as it became costly to pay customers for deposits and demand from borrowers declined as well.
Well, then moving on, and let's talk about the next big event that happened over the weekend. And looking at the political spectrum, then the BJP has released its manifesto for the Lok Sabha election, underlining Prime Minister Narendra Modi's focus on Gyan, the poor, the youth, farmers, and the women, or Garib, Data, Yuva, and Nari Shakti. That's GYAN. This is titled Modi's Guarantee 2024. The manifesto, also known as Sankalp Patra, consists of several promises and focuses on women empowerment, upliftment of the youth, and the poor. The Sankalp Patra promises to enforce the Uniform Civil Code and One Nation, One Election. The Modi Ki Guarantee Manifesto also promises to make 3 crore women Lakpati Didis, while also promising to keep increasing the MSP of crops in a timely manner. BJP's manifesto also mentions making India prosperous, strengthening its international relations, and fostering the development of the country's heritage. Let's go across and listen in to PM Modi announcing the manifesto.
70 वर्ष की आयु से ऊपर के हर बुजुर्ग को आयुष्मान योजना के दायरे में लाया जाएगा। हम 3 करोड़ और घर बनाने का संकल्प लेकर के आगे बढ़ेंगे। अब हम करोड़ों परिवारों का बिजली बिल जीरो करने और बिजली से कमाई के अवसर पैदा करने की दिशा में काम करेंगे। अब तक मुद्रा योजना के तहत लोन की सीमा 10 लाख रुपए हुआ करती थी। अब भाजपा ने इसे बढ़ाकर 20 लाख रुपए करने का इरादा किया है। रेहड़ी पटरी ठेले वाले हमारे भाई बहनों को 50,000 रुपये का कर्ज की जो लिमिट है उसको बढ़ाया जाएगा। भाजपा 3 तरह के इंफ्रास्ट्रक्चर से मजबूत करने जा रही है। पहला है सोशल इंफ्रास्ट्रक्चर, दूसरा है डिजिटल इंफ्रास्ट्रक्चर, तीसरा है फिजिकल इंफ्रास्ट्रक्चर। हम देश में नए सैटेलाइट टाउन्स बनाएंगे जो देश के विकास का ग्रोथ सेंटर बनेंगे, रोजगार के नए अवसर बनाएंगे। विश्व प्रवासी ग्लोबल टूरिस्ट को हमारी विरासत से जोड़ा जाएगा और इस विरासत को हम वर्ल्ड हेरिटेज के साथ जोड़ेंगे। वन नेशन वन इलेक्शन के विचार को भी साकार करने का संकल्प लेकर के आगे बढ़ेंगे। बीजेपी यूनिफॉर्म सिविल कोड को भी देश हित में उतना ही आवश्यक समझती है।
Well, that's PM Modi over the course of the weekend announcing the BJP manifesto. But let's take a look at what brokerages have to say on this, how they're seeing this impacting the Indian economy going ahead. For FY30 estimate, which is what the manifesto is talking about, Phillip Capital is estimating the Indian economy to reach around that $6.7 trillion mark, and they're penciling Nifty to be at 40,000 when it comes to FY30. So, well, we'll be watching out for these numbers. Nifty at 40,000 is something that we can only expect to see now that we are building some resistance when it comes to those 22,000 to 30,000 levels on the Nifty. Moving on, let's also take a look at what Phillip Capital has to say more about this. They're saying that greater scale, clarity, and confidence is at play in the BJP manifesto. They expect more aggression with respect to execution and development as well. They're saying that this manifesto has a long-term view and they're bullish over the economy as well as equities. Now, according to Phillip Capital, the following could be the sectors in focus on the back of this manifesto over the course of the next few years until FY30, at least in their autos, cements, metals, and especially the pipes will be in focus. Real estate, alternative fuel, financials, pharma, FMCG, EMS, hotels, as well as airlines. So all of these sectors will be the hot and buzzing ones, and well, we'll be watching for all of these at least up until FY30 for sure.
All right, with that, we're done on this segment, but we'll see you with more news and updates on the other side.
Hi there, welcome back. Still watching Market Cafe on Now let's talk about the IT bellwether that released its quarter four as FY24 numbers on Friday, and that was TCS. And what a positive surprise coming in from TCS, at least a beat on all fronts, on revenue, on PAT as well as on margin. Revenue came in at 61,237 crores versus 60,583 on a sequential basis. Profitability, net profit also at 12,502 crores versus 11,097. The EBIT then came at 15,918 crores versus a 15,155 crores on a sequential basis. Margins is where we were slightly surprised because that came in at 26% versus 25% on a sequential basis. So it's a beat all across whatever we were estimating here at ET Now. And even when you compare it with ET Now, TCS numbers have done quite well. Moving on, then let's take a look at trends, because the constant currency growth has grown by 1.1%. Quarter 4 EBIT margin has also come in at 26%. Attrition has gone down, and this is also another key positive coming in for TCS over here, because this is also what their HR head, which is Milind Lakkad, also has had to say. Attrition has come down in quarter 4 from 13.3% in quarter 3 to just 12.5% in quarter 4, and he's also said that they started their hiring drive across campuses and they're looking into fill in 10,000 jobs. So that's another positive key point coming in when you look at the TCS number. Moving on, then the total deal wins is also where we were very positively surprised, because for quarter 4 that number has gone up to $13.2 billion from just 8.1 in the previous quarter. Positive news coming in all across TCS. Net headcount also has reduced by 1,759 in the quarter gone by. Also, let's take a look at what brokerages have to say when it comes to TCS's number, what they're expecting with the stock going ahead at least. Let's start by looking at what JP Morgan has to say. JP Morgan says that it sees quarter 4, the quarter 4 has seen sharp margin beats as well as strong deals. Margin beats are showing that execution is going on rather well. They're showing execution prowess when it comes to TCS. They're saying that there's no change in the demand environment. Margins have some scope for expansion, and they see relief also rally coming in for the stock as well. Moving on, then let's also take a look at what Goldman Sachs has to say. Goldman Sachs maintained a buy rating, and they have upgraded their target to 4,350 as well. And Goldman Sachs believes that the estimates are broadly unchanged from its previous estimate coming in. They expect the earnings per share, the EPS growth, to outpace the revenue growth going ahead. So that's one to watch out for as well. And neutral to positive read-through for the sector, for the entire IT sector, is what Goldman Sachs is penciling in. And probability of a double-digit earnings growth in FY25 is what Goldman Sachs is penciling in when it comes to TCS. Moving on, let's also take a look at what CLSA is rating. They've maintained their underperform stance on the stock. The target earnings was 3,940 per share, which they've now gone ahead and hiked to 4,043 rupees. CLSA is saying that strong order book is good, but it's not enough to drive optimism. BSI, high-tech and communication remain suppressed. They've cut the EPS estimates for FY25, FY26 calendar year by up to 2.5%. So, well, that's a slight bit of a contradiction coming in between CLSA as well as Goldman Sachs brokerages. They say that the delayed macro revival and lack of management confidence is something that is hindering their outlook on TCS going ahead. When it comes to Bank of America, then let's take a look at what they said. They've maintained their neutral stance on the rating, and they've gone ahead and cut the target price for TCS despite these results coming earlier at 4,125 rupees per share, now at just 4,040 rupees. And what Bank of America has to say, that calendar year 24 headed for a slow demand uptake. They expect 6% constant currency growth in 2025. They say that soft demand hasn't led to a pricing war yet. Steel intake to be a key differentiator when it comes to the other players of the IT pack. For Nomura, then moving on, Nomura is saying discretionary demand visibility remains low. Modest missing growth, but strong margins is what Nomura is saying, and what Nomura is pointing out, standing out for a key positive for them as well. Near-term growth visibility remains low. Not many levers for margin expansion except for growth is what Nomura is saying. ICICI Securities, they're saying that TCS will perform better versus peers with respect to margins, and they expect the company to gain market share going ahead. Lastly, JM Financial have lowered the FY20 revenue estimate to 5.8% versus 8%. So that's a big coming in from JM Financial as well. But they have increased the margin estimate by 10 to 30 basis points. They have a hold rate, or a hold stance when it comes to this stock, with a target price of 4,130 50 rupees. So, well, mixed views coming in from brokerages, but on the back of the result that TCS has reported on Friday, let's see how the stock opens today, and we'll obviously be talking to the management today over the course of the day as well.
Alright, moving on then. In a big move by the centre, e-commerce platforms have been asked to delist Bonvita from health drinks category on all their portals. Remember, as per the regulatory body, health drink has not been defined in the country's food laws. To project something under the same violates the rules. According to Child Rights Protection Board, the FSAI earlier this month also instructed e-commerce portals against labeling dairy-based or malt-based beverages as health drinks. The advisory comes on the back of an investigation by the National Commission for Protection of Child Rights that found the Bonvita contains sugar levels much above the acceptable limits. Let's also go across to Aishwarya to get more details on this. Aishwarya?
The Ministry of Commerce and Industry has advised e-commerce platforms to remove drinks and beverages categorized under health drinks such as Bonvita to be removed from all of their platforms as well as portals. Here are a few of the reasons. First off, NCPCR in an inquiry under Section 14 of the CRPC Act 2005 concluded that there is no such category as health drink that has been defined under FSS Act 2006. They reasoned that the term health drink has not been defined under the food law, while energy drinks, on the other hand, are just flavored water-based drinks under the law. The advisory was also followed by an inquiry by NCPCR which revealed that Bonvita has high sugar content which exceed the accepting limits. Moreover, FSSAI has said that these brands have been using wrong terms which mislead the consumers, and so they will have to rectify or remove all of these ads. This comes on the back of earlier FSSAI and all of these bodies sending this rectification notification to all of these brands as well as drinks and beverage brands such as Vita, Horlicks, Complan, saying that these brands have been misclassifying all of these food products. They are in fact just malt-based products, Bonvita, Complan, Horlicks, all of them, and cannot be categorized under the health drink category. Energy, on the other hand, is permitted only for products like carbonated and non-carbonated water-based drinks.
Well, Aishwarya, thank you so much for taking us through that. Let's also take a look at what MK has to say on the centre's clampdown regulatory actions coming in on this entire health drink space. They're saying that regulatory actions may impact the already low health food drinks category, which is the HFD category. ITC is clocking 40% sales from healthy products. Nestle, 18% sales are coming from healthy products as well. HUL on the other side is likely to see a hit on this account, and this may impact the prospects of HUL's Horlicks and Boost brands. HUL is most expected to export to the HFD segment, and food categories would see increased regulatory focus, and stern regulations ahead might also affect valuations ahead. And well, MK has said that they have an ad rating on Britannia and a reduced rating on Nestle, and ad rating on both coming in from Marico as well as HUL as well. So, well, this is MK's view when it comes to the entire health food drink space, Shansi.
Alright, time for a quick break then, but when we come back, we'll take a look at some stock-specific news.
Stay with us on ET now. Let's shift focus. Let's talk about metals now, because the London Metal Exchange has banned Russian metal in its system produced on or after the 13th of April. What remains the objective behind this move, and what is the upcoming impact on the markets? Ashesha is joining us to break it down for us. Good morning, Ashesha. Take it away.
Well, yes, metal prices on London Metal Exchange are rising this morning. In fact, aluminium and nickel prices at one point in time were gaining as much as 8 to 9%, and that is because London Metal Exchange has gone ahead and banned Russian metal on account of the sanctions that have been imposed by US and UK. And that is the reason we are seeing that surge come in on metal prices on the London Metal Exchange. Three metals that they've banned in particular include aluminium, nickel as well as copper, and this will apply for production that was done after 13th April, and hence there are two group of analysts. One group believes that because of Russian ban and because Russia is a major producer of metals, this could lead to undersupply in the market, because of which copper aluminium prices could rise. But there's another school of thought believes that because this is applicable only for production that is done after 13th of April, this could lead to oversupply in the market, which could probably push prices lower. But at the moment, prices are on the rise. Aluminium and nickel prices are gaining anywhere between 6 to 8%. Just to give you a sense of the inventory position on London Metal Exchange, out of the total aluminium inventory as on 31st of March 2024, about 91% of inventory was produced in Russia. For copper, it stands at about 62%, and for nickel, it stands at about 36%. Important to note that Russia is the third largest producer of aluminium and nickel, so it plays a crucial role in global production of metals. But as of now, yes, metal prices are rising on account of these sanctions that have been imposed by London Metal Exchange and US and UK in particular. And we have Indian stocks, Indian aluminium, the likes of Hindalco, Vedanta and Nalco in focus on the back of this.
Right, Ashesha, thanks for that roundup on the ban coming in. But moving on then, while you're with us, tell us a little more about the Jefferies note. They've initiated coverage on ONGC with a buy, and they're also saying that they believe that reforms in gas should also support profitability. So what are the key takeaways of this note?
Absolutely. Jefferies has initiated coverage on ONGC. They've initiated coverage with a buy and a target price of 390, which implies nearly 50% upside as compared to Friday's closing price. Spoken about valuations, where they believe that valuations do not capture free flow upside adequately, and hence they see nearly 50% upside from current market price. They believe that the stock is trading at steeper discounts not only to Nifty but also to its long-term averages, and they believe that there is scope for re-rating from current levels. Improved predictability with respect to profitability is also an added positive. Reforms in gas should support profitability from here on, and consolidated net debt to EBITDA is expected to fall to 0.16 times from 0.32 times over FY 20 to 26 on the back of this very positive report that has come in on Jefferies, where they've initiated coverage with a buy rating. 390 is the target. The stock will be in focus today.
All right, Ashesha, thanks for taking us through that. We'll be obviously watching out for ONGC, but Ashesha, now that you're with us and you're still here, take us all through the list of all the stocks that we should be watching out for other than ONGC in today's trading session as well.
Well, yes. First up, let's talk about Tamil Nadu Mercantile Bank, where RBI has communicated to the bank that candidates that were proposed by the bank for the position of MD and CEO were not found suitable, and that the bank will have to submit fresh panel of candidates for with suitable experience. Of some negative news coming, because of which Tamil Nadu Mercantile Bank will be in focus today. Moving on to a whole host of gaming companies, the likes of Nazara Tech and Delta Corp, and that is because of some commentary that came in from Prime Minister Narendra Modi over the weekend, where he said that he is not in favor of over-regulation of the gaming industry. He also said that a better environment should be made to support the industry. So positive commentary that has come in support of the gaming industry, because of which Nazara Tech and Delta Corp will be in focus. Moving on to Shilpa Medicare, on the back of their fundraising plans, where the board has approved fundraising to the tune of 500 crores via QIP. Madhusudan Kela, Sunil Singhania's promoter entity are some of the investors in the company via QIP. Moving on to Anand Rathi Wealth, it is rather reported a set of numbers. Revenues are up marginally 1% on a year-on-year basis, but net profit has declined to about 57 crores in the quarter gone by. Margins have contracted to 40% versus 44% that the company had reported same time last year. And apart from that, they've also approved a buyback to the tune of 165 crores. So keep an eye out on Anand Rathi Wealth on the back of the numbers that it reported. Senco Gold, meanwhile, on the back of operating data for the quarter gone by, where they achieved revenue growth of about 39% on a year-on-year basis in the fourth quarter. Same store growth stood at about 19% for the full year FY 23-24, and they also launched 4 new showrooms. Strong operational updates, Senco Gold also in focus. Lastly, Aster DM, this is because they have declared a special dividend of about 118 rupees per share, which translates to a dividend yield of a whopping 20%. On the back of the special dividend of 118 that the company has announced, Aster DM will also be in focus.
Absolutely. Thanks, Ashesha, for that roundup. We'll keep an eye on all of the counters in today's trading session. Moving on then, some dairy stocks will also be in focus as Investec has initiated coverage, and Zomato also on the back of hike target from UBS. Vinny standing by with all of the key takeaways. Vinny?
So yes, first let's talk about some of the dairy stocks that are going to be in focus. So we're keeping an eye on Dodla Dairy, Heritage Foods, as well Parag and Hatson Agro. Investec is initiating coverage on the dairy sector. I believe that there is a lot of opportunity now, one that an investor can play in this industry. Discretionary consumption, anticipated decrease in inflationary pressure, that should be something that will be driving the growth for all these dairy companies. The pressure will considerably reduce in terms of the margins because of the deflation pressure reducing. Other than that, private players should gain from the shift to value-added products. So yes, that shift will come in for organized players from unorganized players, and that is why they're positive on Dodla Dairy. Dodla Dairy, one, they believe is among the top in terms of the dairy listing, dairy category or dairy companies that they're looking at, because they believe that Dodla Dairy is very well placed to gain from this opportunity. Target price is 1,400 and a buy rating. Hatson Agro following next. They have initiated coverage actually with a sell rating, and that's the last among the list. Target price is 700 rupees per share. Other than that, they like Heritage Foods as well as Parag Milk as well, initiating coverage on both these with a buy rating. So Hatson Agro is last among the list, and the best is for them is Dodla Dairy. Let's talk about Zomato now. UBS has initiated coverage on Zomato. Let's not forget Zomato's already seen such a good run up, but now the target price at UBS is for Zomato is 250 rupees per share. Zomato is trading at around 190 rupees per share on the close of Friday. So yes, they've raised their target price to 250 from previous 195. They believe that there's a lot of opportunity in quick commerce business. That's the Blinkit side. Margin potential that is there, that is underappreciated, and they estimate a 9% margin in by FY29, and 2 times that of the consensus what they're expecting on the street. And also they believe that obviously the gross merchandise value will be something that will see a sharp growth by 29 for Zomato, around at $10.2 billion. So yes, a positive note again on Zomato as well.
Well, Vinny, thanks so much for taking us through that. Dairy stocks in Zomato, we'll be watching out for that as well. But let's move on and talk about some news outside the world of the markets then. And the Supreme Court will be hearing GL Delhi CM Arvind Kejriwal's petition against arrest by the Enforcement Directorate. The hearing comes on the day when ED's judicial custody of Kejriwal ends, and a Delhi court will take up the agency's plea seeking extension of judicial custody. Moving on then, and as tensions between Iran and Israel escalate, Air India has temporarily suspended flights to Tel Aviv. Air India operates 4 weekly flights between the national capital and the Israel city. Well, moving on then, collapse of a building in Muzaffarnagar leaves several labourers trapped, including 1 dead. Several rescue teams are on the site. PM Modi and CM Yogi Adityanath take stock of the situation, ensure rescue operations to continue till all of them are taken out safely from the debris.
Moving on then, and a day after Iran launched a barrage of drones and missiles in attempt to attack Israel, US President Joe Biden has said that the United States will not participate in retaliatory strikes carried out by Israel against Iran. The Israeli war cabinet, however, is in favor of a US-led strike. And in the Battle of Titans, it was Ruturaj Gaikwad's Chennai Super Kings who came out on top against Hardik's Mumbai Indians. Put into bat, the men in yellow set a target of 207, courtesy Dhoni's Fury cameo in the last over. In reply, Rohit Sharma smashed an unbeaten 105, but wickets kept tumbling on the other end, handing CSK a 20-run win.
Well, with that, we're completely timed out on this edition of Market Cafe. But as we let you go, we'll leave you with some wise words coming in from Mihir Bora, CIO at Trust Mutual Fund, who weighs in about which sectors and themes he's positive on going ahead. We'll bid you goodbye, but you listen in to what he had to say.
There are 3 themes that we like, basically, and these are mega themes or mega trends, as you could call them, for India. First is premium consumption. Okay. All premium services and goods will grow at rates much faster than we think they will.
What is premium consumption? What is the ticket value according to you?
It's the segment, I would say, not the ticket value. Say travel and leisure, hotels, high-end cars, higher bikes. You can say a lot of high-end electronics. Okay. All that consumption basket, high-end
luxury
premium real estate. Exactly, premium real estate. All those segments will grow at a rate much faster, and the logic is simple. First of all, the pyramid is shrinking at the bottom and growing at the demographic pyramid, income pyramid is growing at the top much faster.
Urbanization has started.
Urbanization, higher income levels. But numbers, if you just put in perspective, can be very stark. And when we talk about 10, 20 way, you need to keep those big numbers in mind. Between 2005 and 2018 or 2006 and 2018, the number of households with an income level of more than 30 lakhs grew by 8 times.
Okay.
Okay, it was about 10 lakh households, it became 80 lakh households.
8x.
8x, right? That number from 80 lakhs is going to go to 3 crores by 2030.
Another 80 times.
Another, 80 lakhs to 3 crores.
80 lakh to 3 crores.
Another 4
Okay.
times.
Okay.
Another 4
4
times.
times. Okay.
Another 4 times. So it has already grown.
And the
8
base
times.
is 30 lakhs.
Base is now,
No, the
30 lakh income levels.
income
yes,
level,
income
yes.
level, absolutely, right? Similarly, which is the highest end, with the top, affluent, upper middle class will grow by 3 times.
Okay.
Right? So 4x increase in the highest level income level segment, 3x in the upper middle class, and the bottom shrinking. So this will lead to a long run with premium consumption.
Okay. Premium consumption, just to break it for our viewers, that India grows, will grow, Indians will consume more, whether it is travel, whether it is leisure, is experience, or whether it is perhaps buying a better car, a better mobile phone, or better real estate.
Higher end car, higher end mobile phone.
So that's one trend.
Absolutely. Higher jewelry, eating out.
Okay.
You know,
What is the
those
second mega trend?
Second mega is linked to manufacturing and demographic, which is the increase in the working age population.
Okay.
Right? From now till the foreseeable future, 10, 20, 30 years, India is the only large country in the world which will grow its working age population. We are going to add 80 lakhs to 1 crore working age population people every year for the foreseeable future. China has already peaked out. China's working age population is reducing. Japan anyway peaked out much earlier. Europe has peaked out much earlier. US will be flat. Okay. So the only labor supply in the world will come from India, and we can already see that. And apart from the fact that China is a geopolitical question mark, people are getting worried about China. This also, demographics is a big factor to consider. So manufacturing has to come to India, whether we invite it or not. So it will come. And then within that, if you look at the relative size, the total size of manufacturing in India is 0.5 trillion. Right? The world manufacturing GDP per year is 11 trillion.
Okay.
So we are just 5% of the world, and we will add 20% of the working age population for the foreseeable future.
But will everything in manufacturing do well? Because manufacturing starts from, from cars to even electronic phones, even pharma is manufacturing. Everything is part of manufacturing.
Absolutely.
What will do well in manufacturing?
So, for example, in cars, we already have a critical mass of ecosystem because we've done it for the last 30 years now. That cars and two-wheelers ecosystem is very well developed. Electronics, we have barely scratched the surface. Defense manufacturing, we have barely scratched the surface. So there are many segments. Renewables, for example, we have barely semiconductors. We have barely scratched the surface. So these are the segments which will have a longer runway. Of course, auto-electronics will do well. Pharma, we have well the number one in terms of volume manufacturing. Pharma chemicals, we are anyway doing well. But these new segments can have a much higher growth rate for much longer than we.
What about risk of automation? Let's say 10 years ago, if I would have made a template for Indian IT sector, no one would have thought that this sector would see a single-digit growth. No one thought that AI, in a sense, will have a basic problem in terms of absorbing the coders.
Absolutely.
So automation and technology has changed the way how IT would do well. Why do you think that cannot happen in manufacturing?
So, for example, even to manufacture those robots, you need people.
Okay.
Right? So there is, wheels within wheels. And net is that you can't do away with labor completely. Textiles, for example, it is a labor-intensive job. Of course, you need people to man the machine. So maybe you'll upgrade the skill set requirements. That does not mean you do away with people entirely. And especially given the fact that the labor pool is shrinking. So you might just need 1 million robots just to compensate for the shrinking labor pool, if nothing else.
Okay. What's the trend method? We've discussed per capita. We've discussed manufacturing. Trend method.
Okay. So first is premium consumption. And that includes financialization of savings. Okay. So that means that segments, of course, have been growing. We are positive on banks, etc. NBFC is well known. But when we're talking about, again, premiumization and higher income levels, it means that you probably see market link segments like brokers, AMCs, insurance, wealth managers, retail financing. Those segments can grow faster than the rest of the economy, right? So premium.